All right, so let's dive into this stock market roller coaster we've been riding lately.
Yeah,
It's been a pretty wild ride.
definitely.
One minute, the headlines are screaming about record highs, and the next, it's all whispers of a correction. And then on top of that, you throw in the recent Fed rate cut just to stir things up even more.
Right.
It's enough to give anyone whiplash,
Yeah.
especially if you're trying to figure out what it all means for your own, wallet.
Exactly.
So that's what we're doing today, a deep dive to figure out what's really going on.
Yeah, what's really going on beyond the headlines?
Exactly. And how it affects you, the listener.
Because you're right, to be looking for clarity in all of this.
Yeah.
It's not as simple as just saying, okay, a rate cut, that's good or that's bad. You know,
Right?
there's more to it.
There's always more to it.
It's about the message it sends. And I think that's where things get a little bit murky.
Okay, so let's try to clear up some of that murkiness then. What is the message that the Fed is sending with this rate cut, and why were the markets freaking out in a good way, at least at first?
Well, when the Fed cuts rates, it usually means they're trying to stimulate a slowing economy.
Okay.
Think of it like giving a tired runner a shot of espresso.
Instant energy boost.
Exactly.
And that's what we saw with the Dow and the S&P 500, surging to those record highs.
Exactly. And for some companies like NVIDIA or even Darden restaurants, it was like adding rocket fuel.
Wow.
Their stock prices went through the roof. And here's the catch. The market had a little bit of a hangover the next day.
Oh, no.
CNBC reported the Dow actually gave up a 375-point gain, which just goes to show this isn't your typical post-espresso jitters.
No kidding. That is one sharp downturn.
Yeah.
It almost sounds like everyone celebrated the rate cut, popped a little champagne, and then took a closer look at the economy and thought, wait a minute.
That's a great way to put it, because
Okay.
a rate cut is often a sign that the Fed is worried about something.
Oh.
Yeah.
So it's not just about companies being able to borrow money for cheaper, right?
Right.
Which, in theory, that should be good for businesses, right?
Yeah, you would think so.
But it's about what those cheaper borrowing costs kind of tell us about the bigger picture, isn't it?
Precisely. And that's where you get those conflicting headlines.
Yeah.
Some outlets saying market boom and others predicting like a 12% correction.
Right, like Stifel.
Yeah, exactly like Stifel. They're trying to interpret those mixed signals.
Okay, so let's try to decode some of those signals.
Yeah.
What are some of the specific things, the economic anxieties that might have the Fed, tapping the brakes a little bit with this rate cut?
Well, inflation's a big one.
Yeah.
It's cooled down some, but it's like that guest that just won't leave your house.
Oh, I know that guest.
Yeah.
Yeah.
It's still lingering, making everything more expensive. It's putting a damper on spending. And then there's the potential for job market weakness.
Right, because if people aren't sure about their jobs, they're not going to be spending as much, which then, of course, slows down the economy.
Exactly.
Didn't we read something about this?
Yeah.
Was it Markets Insider?
Yes. Markets Insider did a whole deep dive on how some sectors are already seeing layoffs.
Right.
And that's the thing. When people start worrying about their jobs, they tighten their belts.
Yeah, that makes sense.
Yeah.
So, okay, this brings us to the million-dollar question.
Okay.
What does this mean for our listener?
Yeah, the person with actual money on the line.
Right, this isn't just some Wall Street game.
Exactly.
This is about 401k. This is about savings, potentially even job security.
This is real life.
Yeah, so what's the play here? Should everyone be calling their financial advisor in a panic? Should we be liquidating assets, hiding out in a bunker?
I wouldn't go that far.
Okay.
No need to panic, but I think now is a good time, like USA Today was saying,
Yeah.
to revisit your portfolio and really understand your risk tolerance.
Okay, so no panic selling. But what about this whole risk tolerance thing? Because that feels like one of those vague financial terms that people throw around, but no one really explains.
It's actually pretty simple.
Okay.
It's basically how comfortable you are with the ups and downs of the market.
Okay.
Are you someone who checks their portfolio every day and freaks out over a 5% dip? Or are you playing the long game?
Yeah.
Just riding the waves, knowing that the market, generally trends upwards over time.
So are you a worrier, or are you kind of
Exactly.
to the flow?
Exactly. And knowing where you fall on that spectrum is crucial right now.
Okay.
Don't make decisions based on, headlines or what your brother-in-law said at a barbecue.
Right.
Talk to a financial advisor, do your research, and make a plan that aligns with your individual goals and comfort level.
Okay. Solid advice. But speaking of things that make people nervous,
Okay.
we came across this article from Reuters talking about the SEC taking steps to allow half-penny stock pricing.
Interesting.
It seems like kind of random compared to everything else we've been talking about.
It does seem a little random.
Yeah, what's the deal with that?
That's a great question. And it might seem disconnected at first,
Okay.
but it actually ties into this whole idea of market uncertainty.
Okay.
So this move by the SEC, allowing stock prices to be listed in half-penny increments instead of just whole pennies, it's usually aimed at smaller companies.
Smaller companies, okay.
Yeah.
But how does that affect like the average investor who's mostly, invested in like the big names?
Right. So on the surface, it might not seem directly relevant to your typical investor,
Yeah.
but here's where it gets interesting.
Okay.
This move by the SEC is about increasing liquidity.
Okay.
So essentially making it easier to buy and sell shares, particularly for these smaller companies.
More buyers and sellers, potentially more trading activity.
Exactly.
But how does that connect back to all this market uncertainty we've been talking about?
Well, think of it this way. The SEC is, they're making moves to potentially boost certain parts of the market,
Right.
while the Fed is over here tapping the brakes with this rate cut. So these two things happening at the same time kind of adds another layer of complexity to an already uncertain situation.
It's like everyone's trying to steer the ship in different directions at the same time.
Exactly.
No wonder investors are feeling a little seasick.
And that's why, for the listener, trying to make sense of all this, tuning out the noise and focusing on your own financial goals is more important than ever.
Easier said than done, though, right?
Oh, absolutely.
It's hard not to get caught up in all the headlines and what everyone's saying. But with all this talk about rate cuts and half-penny stocks and everything else, I keep coming back to something we read in the Financial Times.
Okay.
They pointed out that historically, rate cuts have actually had a surprisingly muted effect on the market's long-term performance.
That is a very important detail.
Yeah.
And it really underscores why we need to be cautious about, drawing these big conclusions based on these short-term market reactions.
So what does that tell us then? Should we be bracing for a bumpy ride, or is this just a temporary dip before everything goes back to, normal?
Well, if I had a crystal ball, I wouldn't be here.
Right.
But what we do know is that the market is complex. There's no one-size-fits-all answer.
So where does that leave our listener, the one who's just trying to figure out what to do with their money?
Stay informed, think for yourself, and don't just follow the herd.
Okay.
Keep an eye on those economic indicators we talked about.
Yeah.
Revisit your risk tolerance, and don't be afraid to ask questions.
Good advice.
Of your financial advisor, of reliable news sources, even of us.
Absolutely. Knowledge is power, right?
Always.
Especially in the world of finance.
Especially with your money.
So to our listeners, consider this your official permission slip to geek out a little.
Yeah.
Read those articles we mentioned, do some research of your own, and remember the best investment you can make is in yourself. Thanks for taking this deep dive with us. See you next time.